Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within financial reports, and today we're diving deep into RTX Corporation's latest quarterly performance. Get ready because this filing is packed with big numbers and some serious strategic moves. Before we dive in, if you like getting these insights without the corporate jargon, hit that subscribe button. And for a community of like-minded dissectors of finance, join our Discord, linked in the description. RTX Corporation, a titan in aerospace and defense, has just released its financial report for the quarter ending the 30th of September 2025. We're going to break down what these numbers truly mean for the company's health and its future. Let's start with the top line net sales. For the quarter, total net sales hit a whopping $22.5 billion, a healthy jump from $20.1 billion a year ago. This growth isn't just random, it is driven by strong performances across the board. Product sales climbed significantly and so did their services sales, showing a balanced growth across their offerings. Over the 9-month period, net sales reached $64.4 billion, also showing a solid increase from $59.1 billion the previous year. This indicates a consistent upward trend in their business. While net income is looking good, it is important to also glance at other comprehensive income. This part of the report details unrealized gains or losses from things like currency changes and hedging. For the quarter, there was a notable loss in other comprehensive income, mainly due to foreign currency translation adjustments. This might seem concerning, but it often reflects the global nature of their operations and can fluctuate. Now, let's look at the company's financial health at a glance. On the asset side, total assets grew to over $168 billion. A big chunk of this is their goodwill and intangible assets, totaling over $53 billion and $32 billion respectively. This shows the massive value they place on their acquired businesses and intellectual property. On the liability side, total liabilities also increased, but their equity grew even more, reaching over $66 billion. This overall growth in equity is a positive sign of the company's increasing net worth. When it comes to cash, RTX generated over $6.4 billion from operating activities in the 9 months of 2025, a nice increase from $5.6 billion the prior year. This is crucial because it shows the core business is producing strong cash flow. However, investing activities used up over $700 million, mainly due to capital expenditures and business dispositions. Financing activities also saw a significant outflow of over $5.3 billion, largely due to debt repayments and dividend payments. It is clear they are actively managing their financial structure. Speaking of business movements, RTX continues to reshape its portfolio. They completed the sale of the actuation and flight control business for $1.8 billion, realizing a decent gain. They also entered an agreement to sell another business for about $800 million. These divestitures suggest a strategic focus on core, high-growth areas. The company's goodwill, which represents the premium paid for acquisitions over the fair value of net assets, is substantial. For Collins Aerospace alone, it is over $32 billion. Their intangible assets, like brand names and technologies, are also worth tens of billions. This highlights their strategy of growth through acquisition and integration of advanced technologies. Let's talk debt. RTX carries a significant amount of long-term debt, over $38 billion. While a part of this has been repaid this year, it is still a substantial figure. However, their debt to capitalization ratio has improved slightly to 37%. Which is a positive trend showing they are managing their debt relative to their overall financial structure. They also have a $5 billion revolving credit facility, which is currently unused, indicating they have access to liquidity if needed. Among the many disclosures, the environmental remediation costs stand out at $800 million. This is a significant reminder of the long-term responsibilities tied to industrial operations. Also, a major point of attention is the ongoing legal matters. RTX has agreements with the Department of Justice and the Securities and Exchange Commission related to past investigations. While these have resulted in substantial fines and ongoing compliance monitors, the company believes they will not materially impact their future financial health. These are complex legal battles with potentially large consequences if not managed carefully. Another significant event is the Pratt & Whitney powder metal issue, which has led to elevated aircraft on ground levels and ongoing costs for customer compensation and inspections. This has already resulted in substantial charges being recognized. Now for the segment breakdown, Collins Aerospace saw net sales increase by 8% year over year, with operating profits soaring by 19%. Pratt & Whitney also posted impressive growth, with net sales up 16% and operating profit up a massive 35% for the quarter. Raytheon's net sales increased by 10% and operating profit jumped by 33%. This widespread strength across all major segments is a very positive indicator of RTX's overall business health and execution. The company is doing well across its diverse operations. For the defense side, bookings are a key indicator of future revenue. RTX's defense bookings, particularly for Raytheon, remain robust, showing consistent demand for their advanced defense systems. RTX's total backlog is impressive, standing at $251 billion, signaling significant future revenue streams. The management's outlook highlights key industry considerations. They point to government defense spending, global economic and political situations, and technological advancements as major drivers. Their commercial aerospace businesses depend on factors like revenue, passenger miles, and airline financial health. For defense, it is all about US government budget and priorities, as well as international sales. They also acknowledge ongoing supply chain disruptions and inflationary pressures impacting material and labor costs. Looking at the big picture, total net sales saw a significant jump. The organic increase, meaning growth from existing operations without considering acquisitions or divestitures, was $2.6 billion for the quarter and nearly $5.9 billion for the 9 months. This organic growth is the most telling sign of a healthy, expanding business. While divestitures did reduce reported sales, the underlying business is clearly growing. Now, looking at these results more broadly, RTX appears to be executing its strategy effectively. The diversified business segments are all showing strong organic growth, and their robust backlog provides a solid foundation for future performance. However, the significant amount of goodwill and intangible assets on their balance sheet does carry some risk. If any of their acquired businesses or technologies underperform, it could lead to impairment charges. The ongoing legal matters and the powder metal issue, while managed, represent areas that could still present unexpected challenges. Their ability to navigate complex global geopolitical landscapes and supply chain disruptions will be critical. Overall, RTX seems to be in a strong position, driven by consistent demand in both defense and aerospace, but they must remain vigilant in managing their risks. Alright? That is our breakdown of RTX's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.